Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. Thank you as always for joining. We're going to start off today with the pound yen, which is one of the pairs we took a look at last week. Last week we were talking about a bullish counter trend trading opportunity down here at the pound yen as we came down to test previous level of structure support. And you can see it worked out pretty nicely as we rallied all the way across the range and even further. So now we're back for kind of a second continuation on this pair. We had a second opportunity during the week. We have a third opportunity now. Price action has broken and closed above previous structure highs. You can see my first yellow line right here, breaking previous structure. If I get my line out, here we go, breaking previous structure, breaking previous structure. And the next opportunity, or the next level that I think price action will come to are these little humps right up here. Our next level of previous structure resistance above that 185.65 level, going all the way to about 186 even. So you can see that we have a higher high, higher close right here. Markets had some big rallies to end the week. What I would be looking for is a little bit of relief. So a little bit of a pullback into our previous level of structure resistance, which should act as support. And then just as we did here, where we retraced and rallied up, I'd look for one more of those moves where we retrace and a chance to rally up to that next level. So great job on the pound yen. I got a lot of messages from those who took this trade as well. Big ups to you guys. And we may have another opportunity setting up for this week as well. Heading over to dollar Canada next, the loonie, where we have an advanced pattern formation setting up to give some perspective on the loonie. If you're new to the video, we came to a previous level of structure resistance. I'll bring my horizontal line tool right here in the highs. We can look left, structure leaves clues, ran right up into the highs here and got rejected. So now we're putting in a little bit of a retracement, putting in a little bit of relief. I don't know what's going to happen. We don't have a clear direction and trend. And these are the perfect opportunities where we looked for advanced pattern formations. And what we have setting up here is a potential bullish cipher pattern. If we take a look at our initial swing low to swing high right here, this is going to be our X to A leg. Our first retracement is going to be our A to B leg. Our extension up here that came into previous structure resistance is going to be our B to C. And if we retrace all the way down to about right here, let's see if my eyes are correct here. Fibonacci retracement from our swing low all the way to our swing high. Looking for that 786. Ooh, almost nailed it. That is going to be our D completion for a potential bullish cipher pattern. So X to A, swing low to swing high, A to B, B to C, and then a CD right down to the 786, with our completion zone going from our 786 here all the way down to our X leg. So this is an area where we will be looking for buys. You can see there's some nice rejection candles here in the past as well. Haven't brung volume on, but let me just see if there's any type of volume spike in here. Boom, boom, boom. It's all over the place, so nothing special in this area. It's actually a little bit above it, so that's not going to help us out much. But potential bullish cipher pattern, dollar Canada daily chart. Got a ways to go, but can certainly be something that triggers this week if the market continues to retrace. Now to take a look at a different type of counter trend trade, the Aussie dollar is also a pair that's running up into a previous level of structure support. I'll say it once again. Look left, structure leaves clues. We can see that price action has hit these levels multiple times. You can tell by the clues left by the candlestick wicks, right? Remember that from the workshop, that we have some bearish rejection up at this level. We had a big high momentum move to end the week. Would not be surprised if we saw some relief, meaning a little bit of profit taking, a little bit of reevaluation. And if that's going to happen, this is the best level that it would happen at. Because I can tell you what, if I am a buyer that's looking to take profit, this is a level I'm taking profit at. Now, I may buy again at some point, but I'd probably want to take a little bit out of the market here. And these are the areas that are perfect for counter trend trading opportunities. So let's go down to the 4-hour chart real quick. We can see that price is starting to lose momentum. The slope of our move and the size of our candle is starting to slow down. We don't have any other signs for a reversal right now, so you want to be careful with this. This is certainly something I wouldn't sell at market, but this is one where you want to keep an eye on the candlesticks. You want to keep an eye on any type of reversal signal. And if we get it, you can look for a nice little counter trend trade. I'd say from this area down here right to this zone. Now, there's no need to get greedy. I don't think we're going to go all the way across the channel. We could, but I don't think it's worth putting your money at risk for that, especially with an initial target. So just a little bit of a relief, a 65 even down to a 64.40, 64.20, something like that. Get in, get out. And if the bulls want to continue up, let them continue up. We're out the trade. We made our money. Our job is over. Next up is Aussie Canada, and this is an interesting one because this really follows up on a conversation we had in the live room during the week, right? We talked about my journey as a trader and how I guess I struggled with trading kind of strategies that have conflicting signals, and how learning to trade those made me create or forced me to create very specific rules for certain patterns in the market. And at a bigger level, what's hard for newer traders, because we have a lot of new traders on the platform now, is that you go to different places, different courses, different books, different teachers, coaches, whatever you want to say on the internet, and there's often different terminology for the same thing. So a great example is the double top, right? We could look at this Aussie Canada 4 hour, and many of you guys are screaming, man, that is a double top. It came up, it retraced, and now it's retesting. Beautiful. And you ask me, and I would say, no, that's not a double top, or at least not a double top that is tradable for me. And I like kind of putting that part on there because I don't want to tell people it's not a double top because, again, everyone's terminology is different. But this is a perfect example of the depth of the retracement where we came to playing a difference in the pattern. And I'll tell you what, if you want to hear more about this topic, because I don't want to get into a whole rant, you can see the allergies are kicking in. The voice is a little not the sharpest today, but check out a recent Trading Coach podcast episode we did. I believe it's, let me just see, episode 888. How to add a secondary trading strategy, and should you? I think I did a video on YouTube as well talking about some of this stuff as well. But you just become a regular follower of what I'm doing, and you won't miss all the cool content I put out. But for me, so I'm not looking at this as a double top. If you are, yeah, it's a buy, a sell at market. We came up to retest the highs, we held. For me, because of the depth of the retracement, the move has already been made. So the move that I expected from this level, which was a double top in its own right, has already been made. I'm no longer expecting a move lower. And again, you look on the hourly, very nice double top here. This is the move. This is the move we expected. Like same thing we're looking for in Aussie Canada. It's already happened. I'm not looking for this to happen again. What this is more of an inverted head and shoulders pattern. So kind of a head and shoulders pattern flipped upside down, which is typically a sign for a bullish breakout. So I would actually have on my radar a bullish breakout opportunity here. Again, would I buy right now at market? Heck no, right? I want to wait for signs. I want to be predictive in my analysis, reactive in my execution. So I want to wait for the market to show me that the bullish breakout is more likely to happen. And in order to do that, market must fill in the blank. Market must, if you know me, fill in the blank, right? If you don't know, market must violate this level. So bring in a higher high, higher close. And if we get that, we can certainly look for a continuation push to the upside because we do have some room to go higher up to our next level of structure right up here. Lastly, for today, we're taking a look at silver here on the 4-hour chart. Silver has an advanced pattern formation forming as well. Again, you can see when the market is in consolidation, that's when these things tend to form. We're looking at an X to A, our swing high to swing low, A to B, our first retracement right here, B to C, that failed extension, and a CD completion that completes right at our 886. And if you're looking to take it in a zone, our zone goes from that 886 all the way to our X leg. Now, I would warn you, be careful in this situation. We got a lesson this week talking about overlapping structure and creating rules that allow you to have a little bit more flexibility in your trading. This is one of those situations, right? Our X leg is our main level of structure that we want to pay attention to and avoid when trading advanced pattern formations. But keep in mind, look left, structure leaves clues. We have a little higher one over here. And this is a sneaky situation, even right here, I would say, sneaky situation where newer traders, unfortunately, I don't mean to pick on you, right? I was one of you as well, but newer traders, unfortunately, think they're safe. They try to be cute, put a stop loss right above this level. Price comes up, spikes and tests this higher level, knowing it's going to clean out those stops, and then boom, it goes down. The pattern and trading opportunity does exactly what you anticipated. Unfortunately, you were taken out before you had a chance to hop on the train. Don't be that trader. Hey, if you're struggling or looking to learn how to trade, 2 things I recommend. 1, check out the Trading Coach podcast, 3 new episodes each and every week, along with a massive catalog of past episodes. Basically, every trading topic you can possibly think of. So give it a listen. Episodes are short and sweet. And also check out our website, www.tier1trading.com, if you're looking to join a great community of traders. And of course, if you're looking to work with great coaches like myself and Jason Greystone. All right, until next time, plan your trade, trade your plan, like, subscribe, and I'll see you guys next week.